thanks, Asit, for accepting our invite and doing this session on Saturday morning. I'm seeing a lot of familiar faces also, today joining the session. So I'll just take a minute to introduce Growth 91, and then we'll, kickstart. So Growth 91 is basically a startup marketplace. What we started a year ago. It's a technology platform where we enable the startup investment for the retail investor, for the HNIs, NRIs, and corporate. You can even look at start investing with a small ticket investment as well. And a lot of participants today in this session, they have already started investing with Growth 91, and few will be starting after this session as well. So it's in a year we have done almost 16 successful deal. Almost all the deals were oversubscribed. And Neha, if you can go on the next screen. So largely, Growth 91 is a platform. Mostly whatever deal we do, we also participate from individually from our fund. Due diligence also is being done by the external agencies, and then only deal happens on the platform. If we go on the next, Neha. These are the few successful deals which we have done, and I'm sure few of you have already participated in most of the deals. Next. This is the team. Sanjay, myself, and Pratik. We three are the co-founders. We started, this company. Neha and Nidhi, integral part of our, overall team. Asit, Atul Gazbekar, Dr. Kelkar, and Sushant, the strong advisory team as well, and they are helping us a lot, in our overall, growing journey.
Right? And I didn't even know Nidhi. I think interacted with Neha is obviously a new joining.
Yeah, so Asit, Neha and Nidhi both takes care of the entire operations. So today it's changed for me. Otherwise, Neha is the one who handles all this pitch session as well as all the webinars. But they both are now integral part, and they are with the company since over 6 months now.
Okay. Let's move on.
Sure. So I'm sure everyone knows about Asit, but let me just introduce Asit to the benefit of everyone. So Asit is a veteran and well-known name in the banking and finance. In his earlier roles, Asit was the CFO at Fidelity Investment. Also, he was financial controller of Standard Chartered Bank in India, and COO and head of transaction banking at Yes Bank. And that's how he knows a lot of people in this, seminar as well. A lot of Yes Bankers would also be part of this, seminar. Asit is, a Bachelor of Commerce from University of Mumbai, and he's a chartered accountant. He brings with him over 30 years of experience in banking and financial service, industries. Work with, as I said, Fidelity International, Standard Chartered, ANZ, and Bank of America. Asit has been an active angel investor, since last many years, and also serving as a regional director at iPaid, which is a leading fintech, and he's also an advisor with, few other companies as well. Right. So, Asit, welcome, to this session. I formally welcome you for this session. Most of the people you would be knowing, but before this session also, I've got a lot of, personal message from the people. Thanks for, having this session, and they want to know. So a lot of people who wants to be part of the startup journey, but they have something in mind which, is stopping them to start investing. So I'm sure after this session, they'll have a lot of clarity, whether they start or not, but at least, their queries will be, resolved. Right. So, Asit, I'll just kickstart, with my first question, which is a common question, which I have also got it from a lot of people. Please tell the audience about your, investment philosophy.
Sure. First, thanks for having me, Jimish and team. It's great, and for the others to accept. It's great to be doing a session. And like I said, I don't do too many of these, so I'm very casually dressed. All my life, for 35 years, I've been wearing suits and ties, including I've done my walks in the evening in my building in suits and ties. So it's great to be wearing a nice, bright T-shirt and beginning a Saturday morning. My, investment is something that is very dear to my heart. And one thing I would urge everyone in this meeting to start investing early. I meet a lot of people still. Though I've kind of semi-retired, I still meet many, many people every day. And one of the things I tell each one of them at the end of the meeting, even if it's a business meeting, that start investing early. That is very, very important. And diversify your investments as well. So my dad was, one of the reasons I'm kind of leading a very good life is my dad started equity investing at a very early age when no one even knew about the markets. Yeah, he participated in the FPOs or the IPOs of the Reliances, the Colgates, the HDFC Bank, name them. All the blue chips, best companies, even companies like Naveen Fluorine, which I knew very little about. He participated in those IPOs when nobody knew anything about them. My brother, ex-Coca-Cola for 30, 35 years, is heavily into equity investing across India, US, Asia, Europe, everywhere. And post, leaving Yes Bank, I've become more active. Before that, I had some of my family investments, but over and above that, I was into mutual funds because I did about 10 years with Fidelity. So today, I spend a lot of my day in actually managing equity investing and other startup investing. So, and I actually genuinely love it as well. So first key point there is start early. Start early and save early. Save 40-50% of your salary after tax at any stage in life. Actually, initially it could be 40 and gradually make it more than 50. It's very important to do that and then build a diversified portfolio. Diversified means equity. It means Indian equity. It means US equity, European equity, a little bit as much as you have knowledge of. And then startups as well is an important component. Now, the other important part is do your R&D before you invest. Don't go just on tips. Somebody gives you a tip, buy the share. Even if you get a tip, do your R&D before you buy the share. So this probably question, I'll spend a little bit more time than anything else. So for example, look at here channels, here CNBC channels, talk to companies, talk to people, and look for linkages. So for example, when 500 ports, when India started opening up more and more ports, and then Air India ordered 500 aircrafts. So I saw opportunities in airports, I saw airport companies, I saw opportunities in airlines, I saw opportunities in hotels, I saw opportunities in airline parts. Similarly, nowadays, you would have read a lot of articles, and I've done some recent posts on weddings, wedding boom in India. So wedding boom mein listed companies are few. Party Cruises is a company I'm an investor in, having a little bit of a disclaimer almost to say, but along with that company rocking, and you see their results, they do rock. There are other listed companies also. Then you have wedding clothes will do well, and related many things will do well. Wedding gifts will do well. So you have to look for linkages. You're a smart investor, and do that early. Also, I look at which sectors of the economy are doing well. So, for example, some of the sectors that are doing well are domestic new age businesses, which are consumer facing and unique. Auto and auto ancillaries. PSU banks are doing well. Make in India related companies are doing well. Real estate is doing well, etc. Pharma. Manufacturing theme is generally doing very well. So, which sectors are doing well, and within that, which companies are doing well? And when you say which company is doing well, I don't only look at financials. I look at things like profile of existing investors, quality of management, how does the product stack up? So I very often, for the product stack up, if it's a retail company, I will go and visit, like Manyavar, I go and visit their stores. I'll see how well they're doing, how many people are in the stores and some of that stuff. How is the aesthetics of the store? So one observation I generally had about Manyavar is there too many products in that store. So, a little bit, that is a little concern of nicking there, but it's still a great company. I look at things like culture, I look at attrition, I look at all that. And some information I have and some I don't. I try and meet wherever, and if this banking related, I can try and meet senior management as well. Like one banking related company, I recently met the CEO and it reinforced my belief. But I talk to a lot of people, and information is very important. So investing is fabulous. You begin early, you'll make more money than your job. I think I've gone into a lot of detail there, but it's a topic I'm very deeply passionate about. I've
No,
discovered my new love after banking.
this was helpful, Asit. And knowing you, I'm sure, each of my question will have a detailed answer, which will really help people. Thanks, guys. Just a request: if at all you have any question, you can put it in the chat box or post. My question. We'll start taking the questions from the audience. Asit, my
And one thing,
second question.
before we forget, in the end, if we can try and get everybody to put their cameras on, just stay till the end. We won't be very long. We'll be done in max half an hour or so. Just keep your camera on in the end. So if somebody is a little technology savvy, we can try and do a selfie.
Sure,
And
sure,
I
we'll do.
want to get a sense of who all are there in the call.
Yeah, that's in plan. Sure. My second question is, Asit, I'm sure, you have started equity and you have done the mutual fund, and which, since, your role with Fidelity investments, I'm sure mutual fund you started, long back. But the question is, why did you go into the startup investments? Equity was there, mutual fund was there. What has made you, start investing in the startup as well?
One is obviously the growth. India in many ways, and Bangalore in particular, is the startup capital of the world. Watching that means it's a fascinating asset class, little bit more risky because it's either 0-100x or 50x game, 30x game. So the key is to pick the winners. And the other thing is, in life, I like learning. I want to constantly learn. Equity investing is also a learning journey for me, right? At some stage, I wasn't a heavy equity investor because when you're working, you don't have time. Having said that, I advise people to, at least do mutual funds at an early stage. So it's all about learning. I also wanted to diversify my investment book, right? I have equity, I had mutual funds, and India, US. I also did one or two startups in the UK as well. One or two overseas startups I've also invested in. So the idea is to diversify, to constantly learn. When you talk to each founder, there's a learning, right? I typically don't do a startup investing till I talk to the founder and I get comfort from the founder. And not that because Growth 91 is hosting this session, nobody can ever make me say things I don't want to say. People who know me know that well enough. But I think Growth 91 is a well curated platform, and Jamesh and Sanjay and Pratik and everyone else, they choose the deals. They won't put and as somebody who talks to them regularly, I've told them, don't put every deal on the platform. You should be saying no to certain deals. So that's very, very important to you. Yeah. And, interestingly, yeah, I think that's pretty much it. But I've been investing through the Growth 91 platform, which is well curated, and generally the experience has been good. And the guys who actually invest to the platform, if they have some opportunities to do things better, please share that with Jamesh and Sanjay, because I think life is all about improving on a daily basis. One great man told me I learn something new every day. So they should also get feedback to improve.
No, 100%, Asit. Thanks for that. Just a follow-up question on that, Asit. So if you can just elaborate on your maybe first startup investment experience and maybe any learning out of it.
So the first startup was a little bit of an emotional investment, and potentially I haven't made so much of money from it as I would have expected. But so always kind of be a little wary of emotional investments. But I'm still holding on to that investment. And the other thing is, I assess a startup similar to I assess a listed company. So I look at, the quality of the founder today. I look at the founder's commitment. How much money has he invested? What is his idea or his business model? And, I take expert opinion. I look at financials, projections, cash flows, etc. I'll give a small idea, and because we have, I think, the Boba Bhai founder also on the call, Dhruv, and I think he's got he's got another meeting in a short while. So I recently caught up with him, and the Bangalore guys will probably know Boba Bhai a little bit more. I met him, and He's a founder with 3 earlier exits, all successful. He's made money on all 3 exits. He's very passionate about his product. He was the only guy who actually carried his product and made me try both. And I was off sugar, and as some of you all know, I'm trying to lose weight. But I almost pretty much finished both the products he got me. And they're fabulous products. I've actually had some other people try it. I've introduced him to some other leading fintech founders. They've given him audience, so clearly they like him. And so, but it's all about I evaluate, look at his financials. He started in June, July, and he has roughly got a revenue in October about 80 lakhs. Dhruv, am I right? Dhruv, are you on the call?
Also, October we did 70 lakh plus.
70 lakhs, yeah. Pretty accurate, 70 to 80, not hugely different. But so his commitment, par excellence, opening stores very quickly. Started with his home base of Bangalore, and he's got how many stores have you got, Dhruv, now?
We got 12.
12 stores.
So, in Hyderabad now.
Yeah, and at some stage in the next 24 months, I'm sure, if not earlier, he will be EBITDA positive. That's very important in startups. Do they have a plan to becoming profitable? So the old days are gone. You can't forget, just keep on doing revenue and burn. Dhruv, any one or 2 minute quick words since you're on the line?
Sure, sir. So basically, all our stores are already EBITDA positive. So we are profitable. Always learned from our previous startups that business can't run unsustainably. It has to be profitable. And then, the goal is that in next 12 months, how to make it, profitable on a corporate level as well. So, the journey has been great.
Great. So the reason of bringing Dhruv into this conversation, I wanted to tell you that, this is what I evaluate before I actually, that's not really a pitch for Dhruv in any way, but it's more around, how one evaluates, companies. That's more important. So you look at profitability, you look at he's got 3 things that he's been successful. So those are things but I pretty much, Jimesh, learning is avoid emotional and, just do more quality, high quality engagement on the company and learning about the company and the founder and everything. Evaluate it similar to one evaluates a listed company. That's the way I see it. Not very different.
Sure, Asit. Thanks, and thanks, Dhruv, for joining. Asit, second question is maybe maybe your first investment in the learning, but I'm sure you would have done the multiple investment and you will have some success also. So maybe one case, maybe you want to just share it with the people that where you invested, and what's the kind of success you are getting it in this startup.
So I'll name a few because it's hard to name one. That's the key. Cards 91. I think there's a notional gain of 10, 12, 13x. That number is not so relevant. It's what you get when you exit that is more relevant, the way I see it. But it's fintech, card infrastructure, TSP of the banks, good quality management. I regularly engage with them. And high quality company. It's going to, my own reading is it's going to do very well. And both the founders are very good. The people on the ground, the sales guys on the ground are very good. I've engaged with them. I mean, I actually want to talk to them more next week. So that all kind of helps. Very, very important to understand that. Pet Mojo is another company. I try and talk to these companies once a quarter at least. That's very important. Pet Mojo is urban clap of pets. Fabulous concept. The only request I have for them whenever I talk to them is, you should be growing faster into cities. Again, doing very well in NCR from a revenue model perspective, and I will have a conversation post Diwali with them as well. Great company. Homeversity, again, is like an OYO-like model. Hostels, online. See, you look at it, you step back. Education is going to be big in India. Big. The linkages I talked about. Education going to be huge. Soon you will have all the best US universities coming to India. They've already started coming because India is doing very well. As an economy, education is needed to succeed. the most important gift you can give anybody, and my family office does some work on it, is educate people. That's considered this phase of my life, one of the most important things is to gift education. Now, with education being so very important, a linkage there is hostels. Homeversity, fabulous company into Oyo-like model, into online hostel bookings. It's got over 100,000 students on the platform. So that's, and I again I've spoken to that founder of Homeversity at least 4 or 5 times in this journey. I don't talk to everybody and forget. Every relationship in my life is not a one-time relationship. It's got to be continued. You have to continue the follow-up on things. Otherwise, Neelam, who's probably on my call and knows me probably better than most people do, know I have a phenomenal follow-up mechanism, and that comes very handy on startups. And she bears the brunt of my follow-up. So,
almost all the yes bankers knows about your follow-up and Neelam. So rest assured about that. Asit, so just last 1 or 2 questions before I go to the investors question. Although you have covered what do you look at when you do an investment or you evaluate an investment, but maybe just to any summary you want to just give it to the audience one more time, that what all you look at when you evaluate or invest in any startup.
I think I've covered it, but good to talk about the most important things. Founder. Most important thing in every investment is the founder, CEO, whatever you want to call him. When I meet him, do I trust him? What is his vision plans? More important, does he have good execution skills? I test that. In that example I gave about Dhruv, great execution skills here, coming with two of his pack. I also got to see his packages, right? Packaging bhi dikh gayi mujhe, quality of product dikh gaya. So I look at things like that. His values, most important. Very important to invest in people who have good values. Any relationship of my mind is driven by good people having good values. If there is an issue with values, then I don't want to touch them with a barge pole, including having a relationship. How good is the product? USP versus others. Bubble tea, for example, that earlier example is, I don't think there in the US and the UK and Europe, bubble tea is huge. My wife is personally a huge fan of bubble tea, and she tries every possible type of bubble tea. So that the US, and here in this example of USP is customized a Kala Khatta bubble tea with bubbles in it, which a Kala Khatta is big in India. My wife is a huge fan. And she will probably order, if she likes it, she'll order every day maybe. So just, that just helps the USP being generated. Is the founder's model scalable? Revenue, cash flows, etc. And then I run it by a few experts, that I have, that I trust, like Growth 91 could be Prateek, could be anybody, could be other experts. I will talk to a few, angels as well. That'll give me a good sense.
Sure. No, I think that's really helpful, Asit. I'm sure everyone we would have gained the insight of it. And last one from my side before I move to the audience. Any few advices for the investor. There, as I said, there are founders on the call. There are investor who wants to start, who are already a stock investor, other asset class investor, but they want to start in the startup investment. So any a couple of advices for them from your side.
I would tell the investors who are there, actually I would tell everyone to make notes of this last question. Make notes, write them down, and don't look at it every day, because that's the only way you will execute. One is start early. Somebody like your Growth 91, Neha, Nidhi, they're all young kids, right? They should start investing today and create a diversified portfolio. So you should have mutual funds, you should have equity, maybe a little bit of gold if possible. It is a good hedge. Look at India, look at offshore. In the mutual fund category, so you will have equity, you will have mutual funds, you will have India equity, offshore equity, startups. They're all part of that pool. And when you're looking at mutual funds also, don't only look at large cap. Large caps don't typically, there's one very good large cap, the Nippon large cap. which gives I think a 27% CAGR for 3 or 5 years, which is very good. But most large caps typically don't do as well. So have some large caps for sure, because they're the least risky. But unka dam thoda itna nahi hai. Look at small caps, look at mid caps. There's a Quant small cap and Nippon small cap, which are giving 3-year CAGRs of about 40% plus. So look at short term, 1 month performance, 3 months, 6 months, 12 months, 5 years, 10 years, 3 years, whatever. Just look at the performance. It's very simple, that even a kid can do. If I had a 5-year-old son, which I don't, my kids are much bigger, I could teach him how to look at that performance. So it's very easy to see some basics and keep on looking at it every quarter, but give it some time, 2-3 years at least to test. If you have made an investment, give it some time to roost, because there's a cycle for everything. And take some calculated risks to achieve wealth. Wealth generation is not easy. So take some the small cap and mid caps will be larger, but these mutual fund companies do a lot of research before they invest. Do your own R&D. Be active on social medias. You'll get a lot of information on social media, CNBC, other places. And do not put everything in one basket. Do not diversify your portfolio in multiple asset classes. Don't only do startup, because sometimes startups are a little bit more risky and less liquid, but they also have a huge upside to them. Huge upside. I just had a little bit of a summary, 3-4 points before I hand over to Jimish for the Q&As. This is something I also used to cover in all my Yes Bank skip levels that I did. I did so many skip levels. I always, what does it take to succeed in life? I'll just, if you can take notes, it's great. Maybe for old people like Jimish, it doesn't make sense. But from the younger ones like Nikhil Venkat and some of them, they've probably heard it earlier, but it's good to reinforce, because everybody wants to succeed. Does anyone here not want to succeed on this call? I'm sure the answer is no. So everybody wants to succeed, but only 1 or 2% of the people in the world succeed. So what do? They do things differently. One is, I think they build networks very well. So, I mean, very often I would sit on a plane and I would build a relationship with the guy sitting next to me, maybe, the CEOs of a big company or the CM of some state. But I would build a network, and networks are for life. You don't kill them. They should last long. You should stay in touch early. And this bit about success is personal success and professional success. So build a relationship with, all your personal friends and your wife and everyone else, be a two-sided relationship. The other one is, newest one I've added in this, is invest early. Invest early, you'll reap the benefits of it. Diversify investments and do it early. Very, very important. Also build 360-degree relationships. Most people, including I won't name anybody. I was going to pull his leg once again, but I won't. 360-degree relationships is, with your boss, you build a relationship. You build a relationship with your peer, your boss's peers, your customers. Could be anybody. 360 degrees almost. Very important. If you think only building a relationship with your boss will let you succeed, it's not true. Tomorrow your boss is gone, there'll be a new boss. It could be your boss's peer. It could be one of your peers. So build relationships with people. Very, very important to kind of do that. Execution skills. Have a vision and then execute that vision. So for example, if I tell somebody I'm going to do something, it's like a promise, right? Ensure the promise is delivered. It's the hardest thing to do. Most people do not do good quality or high quality execution. But most important, and for that, also along with execution, is preparing. So a guy like me with 35 years of experience prepares for a session like this. If I have a conference call with maybe somebody even 2 years experience, I respect that person. He's taking time to talk to me. I will prepare maybe lesser time than this, but I'll take some time to always prepare for every meeting. Nothing goes unprepared. Everything has to be prepared. So your quality of it and everything has to be tracked. Execution has to be tracked. Similarly, but in execution tracking, you have to look at your 3-year quarterly performance of your mutual funds also. So all around execution. The other thing for youngsters, do different jobs till you discover your passion. You don't know what you're best at. I was 35 years till I did a sales role. I did COO roles, I did CFO roles, I did transaction banking roles, I did audit. I did so many different roles till I discovered I'm best at sales. Doing sales is not a job. Huh? I used to say the rubber hits the road when in sales because that leads to revenue. Nothing is more important than revenue. Nothing. So discover your passion if you can early. I tell my kids and many other people, you're discovering your passion when you're 24. We just took the first job that came our way. Today, people have an opportunity to do so many different things till you discover what you're best at. And the other bit, I will end up with discipline. Most important to be disciplined. Be on time for meetings. I'm always on time. I don't like being 5 minutes earlier. So normally, Neelam will send me a text. The guy is on the call if suppose it's an 11 a.m. call, he's on the call at 10:55. I'll join at or 1 to 11 only. So let's kind of just use that 5 minutes to do a few more things. So use your time well, be highly disciplined, treat people the way you want to be treated, right? So respect people also very important. High personal values, treat people that you want to be treated as a high personal value. So this is just something for you guys to, take away. Mantras, what my mantras for succeeding have been, I'm not sure how much I've succeeded. I think I've done reasonably well. I'm grateful to God for whatever he's given me and my family and my friends. So I just thought I always try and share this with teams.
Asit, thank you so much. I think this was really helpful, and I'm sure I can see the smile on Neha's face as well. I mean, she would have also gained. She also has been thinking to start investing, so I'm sure this would have helped her as well. So Asit, I think just in the interest of time, I'll take a few questions. There are already a lot of questions on the chat. So the first question from Ramesh Babu: how do you track your startup investment?
Ramesh Babu's questions are too hard for me. I can't handle them. He always used to, when he used to work with me, also give me very hard questions. He's a very tough guy.
Yeah, I agree. So his question is, how do you track your startup investment portfolio since you would have invested in multiple startups or maybe multiple asset classes? So how do you, track your investment?
Like I said earlier, that one is obviously I review that portfolio every quarter. So all my startup investments, I review them every quarter. If they have raised some money, and I don't do too many startup investments. I do it in such a manner that I can track them. So I will review them. If they've raised money in the past, I will, see at what valuation have they raised money. And then I talk to the founders at least once a quarter. I get a sense of what their numbers are. Are the numbers looking good? Are they not looking good? What is their revenue? What is the cash burn? What is the cash in the bank? So I look at basic metrics. Like in listed companies, you look at quarterly performance, right? When the quarterly performance comes up here, I try and look at, and that is something actually, it's a good learning from the question that I had. And Jimish, maybe Growth 91, at least a lot of my investments are through you guys, should actually do a quarterly one-pager. The company does that, but we should have a standardized one-pager of what we look at in terms of revenue, look at cost against it, look at EBITDA positive, not positive, etc. You can come up with some metrics to track every quarter.
No, 100%. So, I mean, yes, you pointed it right. Couple of points we need to add, but we do a quarterly, a share update with all the investors who have invested in the respective deal as well.
Maybe we just should, just chat through it for all the investments at one go.
Sure. Second question is from Ashish Kapai. Sorry. There are many platforms which provides the deal. How do I select the deal for my investments?
There are, I guess, most people know there's Growth 91 as a platform. I don't know if there are similar platforms, but I'm pretty positive there are. I've heard more names. I can't remember their names. You should, if I were you, look at both. Try them. try them both, see which is better of the two, which gives better service. Do one through one platform, do one through others, and that helps you get a sense. But then also I typically, the reason I do more through Growth 91 is I typically see people I'm more comfortable with, and I've known these guys, they used to work with me very closely in the past. So I look at things, but and Growth 91 also curates the deals. So that gives, gives me comfort. But more important than just the plain simple deal on the platform, Ashish, you should also evaluate founders, try and join their pitch decks, etc. Look at the pitch deck, look at the founder, his commitment, all the things I talked about. What are his numbers? What is his product? Look at all that. It's not just, okay, something is on Growth 91, I'm going to invest. That's not smart. But the fact is that somebody's already done their due diligence, and Sanjay Sarda has a good due diligence model, which I've discussed with him in the past.
Sure.
I hope that answers.
Sure. Yeah. Sure.
Next question is from Vinod Khot. How do you decide on the valuation of a startup and how much stake you should take?
I rely very often on, I see, is it reasonable? If there is something, I look at that valuation. I see what if there is similar angels, what is their view? If it's to Growth 91, I'll talk to Growth 91. If there is hypothetically a revenue of 5 lakhs a year coming from a company, and it has expectations of being a 50 crore valuation, I will just tell them to bugger off. Recently, I was in one conversation with an offshore company where they wanted $100 million valuation, and their revenue was $500,000 a year. So, you look at some correlation between revenue and valuation. And what percentage of stake? I typically don't take very large stakes in any startup because I want to do multiple startup investments. So if I put very large amount, unless I'm, anything that I do more than 3 to 5 lakhs, I have to have a lot of commitment, a lot of conviction with the guy, that helps me invest more. So if it's in the past, I may have made some emotional decisions. So some stuff is a little bit more. That you learn, right, as you evolve. Life is all about learning something new every day. That's also a mantra of success, which I covered earlier. Learn something new every day. So I hope that answers that question, Manoj.
Yeah.
But there is no model for valuation. If somebody comes up with a model for valuation, it'll be great. That's something, again, for Growth 91 to consider. Because Growth 91 should be all about looking at investors and their, to my mind, if I was running it, which I'm not, the principal objective would be is, how do we protect investors' interests? How do we make investors make more money? How do we make sure investors can exit in a timely manner, etc., etc.? That's the reason they are in existence.
Yes.
So they have to look at some of that. They should be different from what everyone else is doing, right?
One question is from Raj Khandelwal. In regard to research in firms or investment, when you're planning small pockets investment, how can you have a physical research by going to the store or location, and how sensible it is for small pocket investors to do that? So I think, Raj, sorry, Asit,
yeah. Well, let me answer that. I don't think, Raj, we've met. So hi, how are you? I'm Asit Oberoi. Great to meet you. And listen, this is my philosophy. And my investments are slightly larger in value on the equity side, listed company. Visiting stores is normally for equity investments where I will invest periodically. And listen, everybody can't meet the CEO. It's not possible to meet the CEO, right? It's very hard, even for me, to get a CEO meeting is not easy. But hey, you can talk to linkages people, right? If your friend has a Bata store, you can talk to him. You can get some sense, right? What are the new products they're coming in up with? You have to use your brains as much as you can before you do investments. and maybe do lesser investments, lesser number of investments, but try and do due diligence. And listen, if you're doing a listed equity investing, visiting a Bata store or a Manyavar store or something like that is not very hard. These are readily available in every city. You'll get a sense, and maybe there are friends, and very often there are linkages of people. They get a sense of what's happening, new products coming up, new things happening. For example, if sales are growing very rapidly, warehouses will be fuller, etc., etc. A lot of linkages. So it's all around thinking through some of these things, Raj. And we can separately. This is a long discussion item, but we can separately talk about it if you so desire.
Yeah.
You can reach out to me on LinkedIn or whatever.
Sure. Taking the next question. Before that, just request everyone, if at all you can switch on your video for a couple of minutes. So I think team will be able to take pick all of us. So I think
Venkat and Ashish Kapahi, I see, are without their lovely pictures.
Yeah. So Asit, next question is from DS. The question is, can you please suggest an investment ratio between equity and startups?
I don't want to suggest a ratio to anybody.
Yeah.
Because
so equity in the established player.
But I would say have a larger proportion of investments in equity and mutual funds. Because remember one thing, startups are also not liquid. If you want some money, you can sell an equity share and get money instantly, right? So that is my philosophy. Everybody's philosophy will be different. It's a little less risky. You get some sense of, what return you'll get in mutual funds based on past track record. Having said that, past record is no indicator of future performance ever. But and in startups, to multiple startups. Don't expect ki ek, do startup kar liya, to, because both may fail. So if you do ideally aspire to do, more than 10 startups over time, you can begin small and do one or two, gain confidence, do more. And, then the proportion should be in favor of equity and mutual fund investing.
I think next question is from Ravi Saxena. Kindly share your thoughts and experience on diversification of investment. I think Ravi, he has already covered multiple times.
Let's hear it again. I can give a 1 minute response, Jimish. If somebody's asked a question, we can quickly respond. I didn't expect so many questions, guys. I've never had so many questions in my life, which is great. Yeah, Jimish, can you just repeat the question? I didn't hear.
Kindly share your thoughts and experience on diversification of investments.
So very simply, Ravi, look at equity investing, look at mutual fund investing, look at maybe a little bit of gold, and look at startup. In mutual funds, have a larger proportion, ideally in large caps, because you need something in large caps more. And startups are all even lesser than small caps, so have a few, even if HDFC Bank is not performing today, over time it will perform, is my view, for whatever it's worth. So within mutual funds, do large cap, small cap, mid cap. Make sure you do some small caps. They are always generally, and these small caps are very good companies, right? They're not going to be churan companies. They're going to be good companies. So look at all that. Look at, if you can, as you become mature as an investor, I don't know your age profile, but initially begin with India, focus on that. But over time, see if you can, diversify a little bit into US and other markets. Purely, you'll make money on the FX to start with, for sure. And some of the good companies in the US are performing very well. Microsoft, for example, is a great company, which has given phenomenal return. NVIDIA, whoever has heard of, has gone crazy return. Crazy. My son recommended NVIDIA and I invested based on his recommendation. So, it's done phenomenally well.
Sure.
Yep.
Next question is from Venkat Nikhil. I'm sure you will answer it.
I can't handle that. It's too hard.
So his question is, and it's an interesting question. I've never done startup investing in my life. However, I'm eager to start investing at some point. Any guidance on how How can newbie invest in the startups?
Okay.
How can newbie invest in the startup? How can people invest in the
How
startup?
can people invest in startups?
Yeah.
So you need a funnel from which you get leads of startups. I'm sure you get some. Then potentially you look at, channels like Growth 91 and others. They give you funnels. They curate deals. So, join one of those channels through which you can funnel deals. That will always help you getting a funnel of deals coming in. You will always get some deals from friends and colleagues and whatever. It's very important if you can go through a funnel that helps you curate deals, that makes it easier. But so that's where you do startup investing. Talk to fellow angels. Talk to fellow angels like myself, Venkat. You know me for very well. So do many others. I mean, and I'm always open for a conversation. There is nobody who wants to talk to me unless it's somebody trying to sell something all the time. Then I'm. But if anybody wants a conversation, I'll just send a message on LinkedIn. I'm happy to chat. But Venkat has my number and all my details, and I talk to him every now and then. So you will get information. So if your friend is investing, you will get some sense of what you want to invest in.
I think question asked by either Neha or Nidhi from Growth 91 team. According to you, why people are scared to invest in the startups?
Sometimes it's lack of knowledge. Neha, Nidhi, both of you.
Neha.
Neha.
Yeah.
Hi, Neha. Sometimes you get scared, Neha. So, जब भी आप डरते हो ना, तो you can't make decisions. My advice in life is never get scared of anything. Always, with good quality information, you make good decisions. So you should have good quality information. You should think it through. Look at, while there are no audited financials for startups, but you will have good reports, and you can ask for either the curated platforms like Growth 91, etc., or other platforms, or the founder to give you all the information you need. So people are a little nervous, scared, because they don't want their money. Nobody wants money going down the tube. But if you do good due diligence, you will typically, and you don't do investments based on emotions. Mera dost ki company hai, maine uspe dal diya. If you have to be convinced that the idea is good, so if you do good due diligence, you go through curated platforms, then your scare will go away. And this is true in life. Everybody has a little scare in him. First time Vinod Khote does a presentation to the CEO of Yes Bank, he'll be scared, right? Everybody has that scare. I used to also have a scare. And then I worked towards overcoming fear or scares. And that's another topic for another conversation. But everybody goes through this. Maybe, Jimish, that's a good punchline to use for our next session. How do we overcome fear? Everybody has fear in life. And how do you overcome that? There's a magic mantra for that. But you have to overcome this fear also.
Sure.
Young lady.
One interesting question from Selja Kanodia. At what stage do you believe to make an angel investment in a startup?
And I think I know Shelja, but listen, I can do it at any stage. As a matter of fact, I'm talking to somebody, and I think you know them as well, Jamish, to do at very early stages. I haven't done very early stages, but actually that's the best time to actually do it, if you ask me. Somebody's got an idea, incubated idea. Let's spend a lot of good quality time, Shelja, with the guy, study his model, and you'll be one of 5 investors at that stage, right? Because I'll be like a friends and family round. That may well be the best stage. I haven't done anything that early, other than maybe if you say Soumya Shah's Tarakki, that was quite early, right, Jamish? We were the first investors, almost.
Yeah.
So I am happy at any stage.
Yeah.
From earliest stage to listed stage. But as long as I have good information, and then you make good decisions based on good information.
Yeah, and just Selja, just on top of it, what Asit said, it also depends on your investment ticket, right? So if investment ticket is, little large, then you can even participate at a Series A of the company as well. But if the ticket size is, let's say, low, then maybe we may have to look for the seed round or the angel round, and the potential is, yes, risk is always there, but the potential is also much higher at, that stage. I said just last 3 minutes. I'll take 2 questions last. Vinod question. Maybe you can just be little crisp so I can cover one more question. What percentage of your what percentage of your investment do you recommend it in startup? Is 10%, 12% a good benchmark?
Yeah, I think so. I think so. Up to 10%. I wouldn't typically do more than that. But then there's no science to it, right? My portfolio is larger because I've worked all my life. If you're at an early stage in life, at 30, you could even have a slightly larger vintage, So it all depends on, it's a case by case decision based on which stage of life you're in.
Okay. I think Neha needs the question again, that you can explain about growth sense portfolio also if you think that's appropriate. I think Neha, I think that's not prudent to disclose the portfolio.
I'm not trying to sell growth 91. I don't do sessions where I'm trying to sell, because that's not my style.
Yeah.
And I don't even know the details so much.
Yeah.
No, sir, that thing was for, sir, I sent you the personal message that people, if they are like scared to invest in individual deals, then they can try Growth Sense, because it provides a portfolio. So people will be like, okay, so their money won't be like, that's why I was not telling anyone to sell.
That's fine.
No, that's fine. No, don't worry. Don't worry. That's just a comment. I was just indicating that I don't want to, only, but yeah, Growth Sense is a good opportunity to invest, in a fund, let's like a mutual fund in which you can invest in companies. It's a good point.
Yeah. So if time permits, I'll take a last minute. But last question, Asit, for you from DS. What is a good hit rate to become a successful investor? I think not clear the question, but
listen, I'll answer it. There is no, if hypothetically, see the thing with startups, it can go 20x, it could go 50x, it could go. I have a friend who's got something like 100x, but those are all in name, right? Till you realize the money, nothing happens, right? You have to get the cash in the bank. That's when the realization happens. But if you are overall making money, some companies will fail. That's life. Even corporate India, you see some companies failing, right? So some companies will inevitably fail. If you are overall making money at a CAGR of any good CAGR, more than equity, then you're successful. And because some of them will do 10, 20x, right? Even more. So, the small ones that fail can be made up. So as long as you're making good money, more than equity, I would say, then you're successful. And it all depends on the type of companies you pick up. So we've covered all the questions, Jimesh?
I think, I said, we could able to cover, all the questions. Just half a minute from my side. So I think, we have discussed in brief about the startup investment and Asit's philosophy, his investment style, his due diligence process and everything. Just wanted to highlight half a minute. So although startup is a high risk, high reward item, but what if someone is offering you as a investment tool which is a low risk and give you the good return, right? Where capital is safe, suppose, right? So that's what we I think at a Growth Sense do, and I think that was Neha was highlighting. So that's a mutual fund like startup investment fund. You suppose you start with a couple of lakh and it get distributed in, let's say, 50 to 70 startups, right? So ideally your risk becomes very, very low.
That's
right?
Like
but yes, at the same time, the return is also not like a direct investment, when it becomes a multiplier. But that's a good model to start investing. And once you start becoming direct, taking exposure in the startup, you can always become a direct angel investor, start investing in the startup in your own sweet ticket. Asit, thank you so much from the entire Growth 91 team for spending. I was not expecting that call to go beyond 45 minutes, but I'm sure if we still continue, we'll have another few questions. So if at all any question comes, I'll surely reach out to you. But
people can reach out to me separately,
sure.
through LinkedIn or my number. Some of them will. And it was an absolute pleasure to talk to everybody. I enjoyed it. I enjoyed it a lot. Thank you for all your love and good wishes. Thank you.
Thank you so much, Asit. Thank you so much. Thank you everyone for joining the call on Saturday. Thank you so much. Thank you.